This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Monday, February 2nd, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. We'll be sure to get to it during the show. Overnight markets here at March corn down 1.5 pennies at 4.26 3/4. March soybeans are down 5 3/4 at 10.58 and March Chicago wheat was down 5 1/4 at 5.32 3/4. No export sales announcements here this morning. We will get Noble Crush here later on today. Looking for it's a big estimate, 230.5 million bushels. So we'll have to keep an eye there. But yet again, just another big number. I know we talked about that on Friday. Also, what we know here this morning, we're on day 3 of a partial government shutdown. Procedural votes taking place today, but it still appears like they're pretty far away. So we'll have to see where we land there. And we are in February now. So we will begin today pricing, averaging our spring price for crop insurance, which will kick us off here. Dustin, why don't you give us a few thoughts as we start the week, and then we'll throw it around the room.
Yeah, thanks, Dan. Yeah, starting off a little bit lower this week, and that's along with the outside markets like crude oil. I think some of the tensions in Iran may have scaled back just a little bit. That Trump said that they're talking, so that might be part of our move. The dollar has been rising the last couple of days. That the Fed chair pick was much more hawkish and conservative than some of the other picks that could have been chosen. He still wants lower rates, but he's not as big of a proponent on keeping the balance sheet large. So that we saw that historic sell-off in silver and gold following that news, and I think some of that is bled into grains as well too. As far as the insurance pick, this is a huge month for deciding what the framework is for guaranteed income. I think that's going to be a big thing this year still because the increase in subsidies. So we'll be reporting on that daily in the letter and talking about things that we can do around that, to hedge with insurance. So. Yeah, it's kind of like a buckle up moment here for markets. So still, it seems like outsides are still very volatile and could have a big impact on us.
Yeah, no doubt. Well, it's nice to get through January. Justin, I guess a big month here, February. We're going to figure out a lot and get at least a baseline for what we're looking at as we head into, obviously, then March and planting. So I guess what's on your mind?
Yeah, I mean, to Dustin's point, just massive outside moves. When you see silver break 33% in one day. Natural gas is down 15% today. It had days where it's up 20% last week. So, just massive moves. And we're just, kind of sitting here. I think the grain markets are just kind of on the sidelines right now, looking for a story. And I think you look at these outside markets and just realize that if there was a story or there was, bullish or bearish, just to realize that how much these markets can move. If the money was focused on our commodities, you could have really big moves either way. So don't want to take that for granted. We're kind of in this like sideways, comfortably numb type territory. And I think that the money that's moving around here, you got to be cautious. It could be friendly. It could be a bullish type move, but it also could be bearish. So I'm like with Dustin. I just think, hopefully we can get a decent price set for crop insurance. It'd be nice if we could have a rally, obviously, during the month of February. But I still go back to the biggest risk we have is, I think, between now and March 15th. I'm concerned about cash flow needs for the grower. I'm concerned about the amount of corn that's owned by the grower. I think both those things are going to be a problem. I'm hoping that we come out of the backside of it friendly, but I do think the risk is the next 45 days. So I'm cautiously optimistic after that point. From what price that is, I don't know. You know, I do feel like we could probably break a little more than we think going into spring, and then we see. So
You got we looked at commitment of traders. You got they, you know, a little bit of they're kind of modestly short corn, and I mean they're just a little bit long on the bean side. Justin, anything there that you see?
no, I mean I think that's even a bigger problem personally. I think we could break farther than we think. Not predicting that. That all the things are aligning where it throws caution to me. You know, the bank's giving you calls, talking about how bad their book is and trying to figure out how to renew some people and having to kick some people out. That's usually the call before they have to call their client, obviously. So, yeah, I think there's going to be a huge cash. I mean, you throw a government shutdown into the mix and you're not getting bridge payments and all these things. And we talk about a lot on this show about PLC and all these things that do help. And those are, you have to know that. The problem is you don't get paid on a lot of that stuff till later.
Yeah, down the road.
So there's one thing about where these things kick in and your profitability and all that. There's another about cash flow needs, right? And there's a cash flow need issue that's going to happen here in the next 45 days. You throw that into first notice day and all these other things. That's why I think this time period could be volatile.
Ben, what's on your mind this morning?
I thought interesting development over the weekend. You know, we had deployed a lot of U.S. assets in the Iran area, and nothing really happened there. We see crude oil getting hit from it this morning. I saw a pretty good analysis by someone that described it as sort of a feint to see what they would do in the event if they thought they were going to be attacked. So I don't know that you completely write that off for now, but certainly crude oil is relaxed and had, you know, almost a $10 a barrel rally above its lows, and it's coming off pretty hard this morning. I think there's definitely a lot of uneasiness still over that. I don't think you can put it away. You know, just going into the weekend, there was certainly a lot of anxiety in the trading world between what was going on there, what happened in the silver market, gold markets. So, you know, I'd say this morning feels pretty soft landing-ish to me if you look around at all the other markets, considering the weekend information. Grain's going to do their thing here this morning. We'll see what happens. I agree with Justin. I think the potential for considerable weakness, you know, certainly last 2/3 of February are pretty big, and it won't be long. Let's see, we got first business day of the month today. We'll start Goldman roll on Friday. We'll see how spreads react to that.
Very good. Ryland, got a couple minutes here. Smallest cattle herd since 1951. We've got our seventh consecutive year of lower beef cow numbers. And I think the big one was just the, you saw 100% of heifer retention, but just not enough to show significant expansion as we go forward here. So I guess what was your take from Friday's report?
Yeah, I mean, I think overall, just kind of a sigh of relief, to be honest, just and kind of corroborated some of the feelings I think that were out there. I mean, obviously, the all cattle and calf number was slightly above expectations, but I don't think anything really to write home about. I mean, yeah, like you said, it's the smallest herd since 1951, and obviously no real signs of expansion. We are starting to see heifers, at least on this report, kind of imply that we are starting to see heifers being retained slightly. So, and that number, I don't know if that's going to be a huge shock. I mean, in every cycle, we start to see that number of replacement beef cows start to creep up, but that's a long process. I mean, this could take years, and there has to be the right incentive. and kind of the right environment overall for cattle feeding. So I think in general, market still probably sees this as kind of longer term friendly, but with a caveat, right? Those are numbers that we're going to be watching for the next probably 4 to 5 reports here. So something to be aware of, but overall, yeah, still contraction kind of continues here. And with the cash trade last week, I mean, we saw Packers pay up to $2.40, $5 higher from the previous week. So definitely on, well, I'd say above expectation, almost for sure. So I think you got a pretty friendly tone going into the cattle market overall this morning. And on the hog side of things, kind of two-sided action, just seeing the market leak a little bit towards the end of last week. I mean, definitely overbought, kind of feels like it's gravitating toward the 20-day. So we'll see if we start to see that. Commitment of traders definitely showed the funds really want to stay long this market, adding 16,000 contracts previous week. So it just feels like they're up to 113,000 net long. So they're a really big area of support in this market. So the demand for protein futures, I think, is still pretty heavy right now overall. And but on the cash side of things, did see a little bit of weakness, down 81 cents at 83.57. So could continue to kind of see this thing leak a little bit, but overall, probably test those support levels and look to hold them in the interim.
It was interesting to see. I mean, the managed money certainly with the appetite for hogs right now.
Yeah, absolutely. And it seems like it's been this way, you know, when they really want to get long, it just, even of like, you know, last year, I mean, they would really press hard. So I don't know if it's necessarily a function of just having an overtly tight supply, but it's just seasonally between now and the summertime. This is when we really see demand start to ramp up and prices seasonally gravitate higher. You got a lot of that kind of baked in, maybe a little bit of ahead of where we traditionally kind of see ourselves, you know, at this point in the year. And I think that's why we're just a little bit overbought. So you see these kind of wild swings, but overall trend should still hold pretty firm right now. Typically the market doesn't see its seasonal top till around February 17th to the 20th. So I think at least the longs feel like they're not under too much pressure right now to hold those positions, at least in the interim.
Very good. Appreciate the update there. If now that we're into February, we've talked about it a number of times, but we're certainly going to have premium content and a deeper dive into some of these decisions that are necessary as we select crop insurance. So check out the War Room report. If you love the War Room and you like what we're talking about on a daily basis, this is a deeper dive. The link is in the comment section there, so be sure to check that out. Also, 10% of those subscriptions, the fee of those subscription goes directly to support the AgYield Next Gen Foundation, supporting the next generation of leaders in ag and the scholarship competition there. So be sure to check that out. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. We're doing this every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a good start to the week, and we'll talk to you again tomorrow.
The War Room is presented by AgYield, a risk management partner of American grain farmers for over 50 years. Looking for more in-depth analysis? Check out the War Room report. Our team's knowledge and expertise delivered straight to your inbox every weekday. Each report delivers key market-moving headlines, critical weather updates, USDA report breakdowns, and exclusive video content. All for $50 a month. And most importantly, 10% of every subscription will go directly to support the AgYield Next Gen Foundation, a nonprofit investing in agricultural education and the future of farming. To sign up for the War Room report, check out the link in the description or learn more at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.